What's up, crypto fam?
Squeezium C here, and you already know the juice is always worth the squeeze. Today, we're diving deep into everyone's favorite meme coin, Dogecoin. I know. The charts have been looking a little shaky lately, making some people nervous. But what if I told you this dip, this scary-looking drop, might be the exact thing we need? This could be the final countdown before the real liftoff. Stick with me, because we're going to break down why a dip to 13 cents isn't just possible. It might be the launchpad for Dogecoin's next massive rally. Let's get straight into it. We're seeing what many experienced traders call a classic shakeout scenario. Imagine a tree full of ripe fruit. You have to shake the tree hard to get all the weak fruit to fall off before you can collect the best ones. That's what's happening in the market. This is that final capitulation moment where the weak hands, the investors who are driven by fear and short-term panic, sell their bags. They can't handle the heat. But their panic selling is what creates the perfect, solid base for the next parabolic move upwards. It's a brutal, highly volatile pattern, but it's one we've seen time and time again with Dogecoin. So let's look at the data. As of right now, mid-November 2025, a dip towards that 13-cent level is absolutely within the realm of possibility before the rocket truly takes off. I'm not just pulling this number out of thin air. There's a strong case for this dip. And it's important you understand the mechanics behind it. First, let's talk about the current price pressure. Dogecoin is hovering around the 16-cent mark, and it's been feeling the heat from some significant selling. This isn't happening in a vacuum. We just saw a broader market correction where Bitcoin took a sharp dive. As we all know, when Bitcoin sneezes, the rest of the market catches a cold. Dogecoin's high correlation with Bitcoin means it is getting dragged down by this wider market sentiment. This external pressure is the first major factor pushing us towards that lower support level. Now let's get a bit technical and look at the charts. There are critical support zones that every trader is watching right now. Think of these support levels like floors in a building. If one floor breaks, we fall to the one below it. Right now, Doge is testing a key floor. If the selling pressure continues and we break through this level, the next major support is waiting down there, right around that 13 to 14 cent area. A break below our current support could accelerate the crash as automated sell orders trigger and panic spreads. This isn't a random guess. It's based on historical price action and volume analysis. These are the levels where buyers have previously stepped in, and the market will test to see if that buying strength is still there. But here's the most important part, the why behind this potential crash, the shakeout mechanism. A sharp, fast dip below the current trading range, especially below 15 cents, would be incredibly efficient at shaking out all the retail investors who bought in at higher prices, say, between 17 and 19 cents. These are the folks who jumped in expecting a quick profit and are now sitting at a loss. A sudden drop triggers their stop losses or just scares them into selling to cut their losses. Why is this good? Because it cleanses the market. It gets rid of all the excessive leverage and forces out the short-term speculators. When these sellers are gone, who's left? The long-term believers, the diamond hands, the people who understand the project's potential. This creates a much healthier, more stable foundation for a sustainable long-term rally. You can't build a skyscraper on shaky ground, and this dip is what solidifies the foundation. It's the market's way of resetting itself, preparing for a powerful and sustained move to the upside. So, while a dip to 13 cents might look terrifying on the surface, it's actually a sign that the market is preparing for its next big chapter. Let's dig deeper into what this cleansing process really means for Dogecoin's future. When you have too many leveraged traders in the market, it becomes incredibly unstable. These are traders using borrowed money to amplify their bets. A small dip can trigger a liquidation cascade where their positions are automatically sold, pushing the price down even further, which triggers more liquidations. It's a vicious cycle. A quick, sharp shakeout wipes these leveraged positions clean off the board. It's like a forest fire that clears out all the dead underbrush, allowing new, healthy growth to emerge. Once the leverage is gone, the price action becomes more organic, driven by genuine supply and demand rather than speculative gambling. Furthermore, think about the psychology. When the price grinds down slowly, it creates lingering doubt and fear. But a fast, brutal crash and a quick recovery? That does something different. It instills a sense of, I missed the bottom. In those who sold, they see the price rebound sharply and experience intense FOMO, or fear of missing out. They often end up buying back in at a higher price than they sold for, adding fuel to the new rally. This V-shaped recovery is a powerful psychological pattern. It shakes out the weak, rewards the patient, and traps the bears who were shorting the asset. For those of us who have been waiting with cash on the sidelines, this shakeout is the golden opportunity we've been looking for, the ultimate. Buy the dip moment before the real fireworks begin. So, what should you be doing right now? First and foremost, this is not financial advice. You have to do your own research and make decisions based on your own risk tolerance. But from an analytical perspective, this is a time for patience and strategy, not panic. If you believe in the long-term potential of Dogecoin, a dip like this is a gift. It's a chance to accumulate at a discount. Instead of trying to catch the exact bottom, which is nearly impossible, consider a strategy like dollar-cost averaging. This means you invest a fixed amount of money at regular intervals, buying more coins when the price is low and fewer when it's high. Keep your eyes glued to those key levels. Watch what happens if and when Doge approaches that 13-cent support zone. Look for signs of a reversal, a surge in buying volume, bullish candlestick patterns, and positive sentiment returning to the market. This isn't a time to blindly follow the crowd. It's a time to be a contrarian, to think critically, and to be ready to act when others are fearful. The biggest gains in crypto are often made by those who have the courage to buy when there's blood in the streets. This potential shakeout is setting the stage for just such a moment. In conclusion, don't let the red candles scare you. Understand the market mechanics at play. This isn't just random chaos. It's a calculated, albeit painful, process of market purification. The pressure from Bitcoin, the technical breakdown to key support levels, and the strategic shakeout of weak hands are all converging to create what could be the single best buying opportunity for Dogecoin this cycle. The goal is to clear the runway for a truly explosive launch. A drop to 13 cents isn't the end. For the prepared investor, it could very well be the beginning of the next legendary bull run. Stay smart, stay patient, and stay informed. This is where fortunes can be made, but only if you have the conviction to see through the short-term noise. That's all the juice I've got for you today. If you got value from this breakdown, do me a huge favor and squeeze that like button. Make sure you're subscribed with notifications on so you don't miss the next update. Thanks for watching, and I'll see you in the next video.